All right, y'all. We got an action-packed video for you today. Today we're going to be going over the earnings of Alphabet, Microsoft, Visa, Coke had earnings yesterday, and then of course UPS and DR Horton. And these are just some of the ones that I picked out of today. And I just really wanted to go over and show you, why has the QQQ or the NASDAQ, why has it been falling so much? Even just in the last couple of days. I mean, look at this. We went from, what is that, around 346, 345 with a low of 311 right after the close today. So it's been kind of crazy. And I just want to show you why, and kind of just my thoughts and just things that I pulled out of the different earnings releases that I felt were really important. Without further ado, let's hop right into it. So for those who are interested, here's going to be the earnings release for the rest of the week. Obviously, we're going to be taking a look at a couple companies that I already mentioned today. If you want to look, check the card down below. But without further ado, let's hop into it. So I'm not going to go into crazy depth on this. It's just something I wanted to show you. It's mostly just the operating segments and just, what I found. So for Google, we're going to look at Google first. One of the key things that they pointed out was how important it was that YouTube was doing really well. So you can see here, Google Search and Other, 39 billion on the quarter from 31 last year. Then we had YouTube ads, 6.8 billion, and then almost 6 billion on the year. And then Google Network, 6.8 in 2021, 8.1 billion on this year. So these are all great and it's awesome to see. And I think that just the overall, growth in the different segments is really helpful. But I do think that they kept harping on how important YouTube shorts were and just the way that they've been able to hold users on YouTube. It's been really interesting to see the growth just from both sides of the coin. Now, some of the notes that I wrote down here on the right, and this is items from their earnings call that they pointed out, and some of it, if it's not in quotes, it came from their release. So they said, and even as people have returned to in-person activities, time spent on YouTube has continued to grow. Just as YouTube evolves from desktop to mobile, that created huge opportunities. We are excited the new opportunities we see now. Short-form video is one. YouTube Shorts is now averaging over 30 billion daily views. That's 4 times as much as a year ago. They also said, as you know, we made changes to our Google Play pricing model to help all developers on our platform succeed. Today, 99% of developers qualify for a service fee of 15% or less. While this impacted our short-term results, we think that it's the right long-term approach to support the ecosystem and to be most developer-friendly app store and gaming platform available. And then, of course, as stated in our press release today, our board has authorized repurchase of up to additional $70 billion of our Class A and Class C shares in a manner that is the best interest of the company and stockholders. So overall, the company is seeing growth on their YouTube platform, especially through Shorts, and they also are taking a step into, making Google Play more accessible. They're trying to get developers onto their platform and, really trying to undercut Apple. The thing is that a lot of people don't realize if you're US centric, a lot of people in the US use iPhones, but outside of that, the Android and iPhone market share is almost even from last time I checked. Last time I checked was probably a year ago. So I don't know if it's changed too much or not. But really what you need to know is that Google Play is a big app store in terms of like users and TAM and all that. So it is something I wanted to know. So next up, I want to mention Microsoft. And here we're going to see on the left, you have the segments from their earnings release. So you had productivity and business processes. On the quarter, it's $15 billion versus $13 billion last year. You had Intelligent Cloud, $19 billion this year versus $15 billion last year. And then more personal computing, which is $14 billion this year versus $13 billion. And unsurprisingly, Microsoft's not going to go anywhere. And you kind of saw just that in the way that the CEO, the CFO were presenting just the data. And they were talking about the business as a whole and how sticky it really, really is. So just going over that, I just wanted to note just some of the different segments and things that they were seeing within the business. So they said in productivity and business processes, we expect revenue between $16.65 and $16.9 billion. And this is for the last quarter of their fiscal year. So just next quarter for them. In Office commercial revenue growth will again be driven by Office 365 with healthy seat growth across customer segments and ARPU growth through E5. We expect Office 365 revenue growth to be sequentially lower by a point or two on a constant currency basis in our On-premises business, we expect revenue to decline similar to last quarter. In-office consumer, we expect the revenue to grow in high single digits, driven by Office 365 subscriptions. For LinkedIn, now this is something that we don't hear about a lot, but LinkedIn was actually pretty big just over the last couple of years. It's grown huge. But for LinkedIn, we expect revenue growth in the high 20s, driven by the strong job market and healthy engagement on the platform. And in Dynamics, we expect revenue growth similar to last quarter. For Intelligent Cloud, we expect revenue between 21.1 and 21.35 billion. And just really, you can see that they're firing on all cylinders. This was almost a grade A plus earnings release. Honestly, at this point, I don't know what Microsoft can't do. And one of the things that they noted was one of the questions that asked to the CEO was about the durability and what the business management thinks of the durability of these companies, and say if we're going into a recession, what people really think of the products and will they actually keep them. So he responded, I would also say that in many of these places we have price leadership. I mean, take one point I made, which is that if there are any macro headwinds, wherever you have more value for less price means you win. In our case, when it comes to our commercial cloud offerings, we have significant advantages on that across the stack. Now, really, he kind of touched on, they control the price because they control the product. There's really not too many other things that compete with Office 365, Azure, and some of the other cloud products that they offer within, their sort of suite, or they call it stack, of technology. And I really think that Microsoft is set up over the next couple of years to really grow. And they actually, the CEO had mentioned that they expect technological spend as a proportion of GDP to double over the next 10 years, which I think is pretty bold statement, but it just goes to show you that when you're in this and this industry, you can make claims like that. And I wouldn't be surprised to see if tech even goes higher than that, because obviously we've accelerated hugely just in the last couple of years, let alone in the future when things really run on every electronic platform. So it'll be interesting to see. So next up we have Coke, and again, Coke did their earnings on the 25th, not the 26th today. But I just wanted to go over some of the important things that were mentioned. So you can see on the left, you got the net operating revenues of the different regions and just what the comparison was for each region. Unsurprisingly, for most of these regions, I mean, when comparing to 2021 Q1, it's not really that surprising that, we're up, because I feel like people are starting to buy more soda and just buy some of the other Coca-Cola branded products. Not even just specifically soda, but you'll see here. So we just scroll back up. So one of the sections that I had highlighted was just the category performances and the differences that were made. So this is what they had in their earnings release. So sparkling soft drinks grew 7%, driven by growth across all geographic operating segments, primarily through Europe, Middle East, and Africa, and Latin America. Trademark Coca-Cola grew 6%, and then Coca-Cola Zero Sugar grew 14%. Sparkling flavors grew 7%. So nutrition, juice, dairy, and plant-based beverages grew 12%, led by Fairlife in the United States, Minute Maid, Pulpy in China, and Maaza in India. I hope I pronounced that right. And then hydration, sports, coffee, and tea grew 10%. Hydration grew 8%, led by strong growth in Latin America, Europe, Middle East, and Africa. Sports drinks grew 22%, primarily driven by a strong growth of Body Armor and Powerade, which is kind of interesting. And then you had tea grew 8%, led by growth in Brazil, Japan, and Mexico. Coffee grew 27%, primarily driven by the cycle of the impact of Costa retail store closures in the United Kingdom in the prior year and continued expansion of Costa coffee across markets. So obviously Coca-Cola is still growing somehow. And I think they estimated their fiscal year was around 6 to 7% growth for the year. And I can't believe they're still growing. Like, you would think you would gotten to every single market now, but really they're trying to implement new marketing campaigns, trying to get people associated with Coca-Cola and new products that are coming out. And you kind of forget that Coca-Cola owns more than just, their individual Coca-Cola brand. There's a bunch of things that fall underneath this canopy. So looking at some of the notes I took, obviously the ones I just read to you, and then of course, When it comes to capital allocation, our priority remains the same, and we continue to balance financial flexibility with the efficient capital structure. For 2022, we announced a dividend increase of 5%, a higher rate than in recent years, and we also announced the resumption of a share repurchase with approximately $500 million in net repurchase expected this year. So that's awesome. And obviously, if you're Warren Buffett, 5% is a lot of money. If you're a normal human being who just happens to have some shares of Coca-Cola for some reason, that's great. You love to see a dividend play keep producing. And I'm glad that they raised the dividend for those who own it. Now, the last part that I wanted to touch on for Coca-Cola came from their earnings call. And it really was touching on, their pricing power and what they really have. So when they were talking about what that looked like, the CEO mentioned that, well, when you go into high inflation, consumers come under pressure. There's clearly reductions in real purchasing power going on for some segments of the population, if not everyone around the world. So our focus is very much to find those packaging and price options by channel, where we can stay connected to the people who are coming under purchasing power pressure, very much affordability. Just building on the Latin American example from the last question, a lot of focus on returnable, refillable bottles because of economics of those packages work to an extent that you can have lower price point for the package. And with the reductions in purchasing power, we very much see the actual out-of-pocket price point and keep a lower entry price in the categories is very important, also pushing the expansion of refillables in places like South Africa. So very much acting on the signs of the consumer purchasing power pressure, but very much also anticipating that it will increase. It would be great if we were a perfect landing out of this inflation environment. The rhyme of history would tell you that at some point, either inflation or reduction in purchasing power or supply constraints will eventually create a bump. And at that point, we will want to be both assessing the premium opportunities that have, but very much with an anchor in the affordability and entry price point opportunities and necessities as customers come under pressure. So really what they're pointing to is the fact that, they would rather be ahead of the pricing curve rather than waiting for something to happen like a recession and trying to lower their prices or raise their prices as they see fit. They want to make sure that they're ahead of that, so they're trying to pass on these costs to the consumer. So it's something that you should note if you're looking into this. I definitely want to be paying attention to Coca-Cola's earnings as the quarters go by, just because inflation hasn't really slowed down even since the first quarter, and I don't think it's going to slow down maybe till the end of the year. I mean, we need to start feeling the pressure from those interest rate hikes, but we'll see. So this is something to watch. A lot of companies are going to probably start talking about this more and more. So next up we have Visa. This is one that I was really interested in. I don't think I've ever looked at like a Visa earnings release before. I've obviously just seen the news articles and things that come out, but I just figured I wanted to touch on it because this is really when you want to look at like the economics of a business or really just a country as a whole and really the globe because they control a lot. It's good to look at a company like Visa or MasterCard to get an idea. So their revenues for the quarter obviously have been up pretty high. People have been spending a lot. You can see the different breakouts of each segment that they have and what that really looks like. One of the key things I wanted to touch on here was the payments volume. So their payments volume was 17%. So it's a 17% increase in payment volume. Cross-border volume excluding intra-Europe was 47%. Cross-border volume in total is 38%. But cross-border volume was 47%. That's crazy. And then processed transactions was 19%. So look at the growth just year over year. Like, I mean, I know 2021 didn't have a ton of like traveling and services and things like that, but that was actually one of the things that they had touched on was, the switch in how they've seen consumer spend. So one thing I wanted to add on was the notes. So I obviously touched on the payment volumes and I touched on the international volumes. So we'll head down to the next lines. During the 3 months ended March 31st, 2022, Visa repurchased 13.8 million shares of Class A common stock at an average price of $210.19 per share for $2.9 billion. In the 6 months ended March 31st, 2022, Visa repurchased a total of 33 million shares of Class A common stock at an average price of $210.11. Not a lot of movement. Using $7 billion of cash on hand. The company had $9.7 billion remaining of the authorized funds for repurchase as of March 31st, 2022, which is awesome. So the cross-border travel-related spend, excluding intra-Europe, grew 111% year over year, indexed at 82% of 2019 levels. And this was something that they touched on. If you go into their earnings call, you can see them talk about it a ton. Really, they saw how the consumer switched from spending on items, so materials and things, and material goods really, and products, and switched it to services, so traveling, hotels, and other things like that, where you have to go somewhere to experience it. Because I mean, obviously people couldn't travel during the pandemic, and not that we're not still in one, but there was a lot more travel restrictions. And they actually had mentioned that a lot of the bigger Asian countries like China, Korea, Japan have pandemic, lockdowns and things still, and they still have a lot of rules in place for traveling. So it's something that you want to note when you're looking at a company like this that processes transactions, because really the growth catalyst could be if these companies are able to maintain their market share in these markets, and actually, China or Japan or wherever starts opening up these borders and open up their markets again, they can benefit from this. Because you think about both, people traveling from China and to China, that's a very big tourist country, both ways, both exporting and importing tourists. So it'll be interesting to see. And then lastly, we have not seen impacts on discretionary spending that we can discern. If anything, discretionary spending, especially from affluent customers and credit card holders, is going up quite healthily. So in general, there isn't any evident impact on inflation, but obviously we'll keep looking for it. So they didn't see anything as far as spending goes, like spending habits. I'm sure there's slight changes, but nothing of material that will actually be concerning, which makes me feel better personally that we're not seeing any crazy shifts in spending, at least yet, from a credit card processor's perspective. One of the other things I wanted to note was just showing the sort of operational metrics that they had. So what you're looking at here is that payments volume growth. So if you look at it, it's from 2021 and 2022, and just look at the spike when we started getting the stimulus back in April 2021, and then it's been slowly going down, and the same thing goes with this chart as well between credit and debit. So it is interesting to see. I'm curious to see what this will look like in the next couple of quarters as things start to really change with interest rates, but that is Visa. So next up, you got UPS as second to last one. Obviously here we got the earnings release on the left, and I just wanted to break out the different revenues by different segments. So you can see here, 2022, I don't know why, whoever responsible for putting this together, oh my God, but you had U.S. domestic package up $15 billion versus $14 billion last year. International package is $4.8 billion versus $4.6 last year. And then you had supply chain solutions, $4.3 billion versus $4.2 billion. This is pretty good that we still see growth, even if you think about the fact that we're sort of, Q1 isn't like a huge, product month or quarter really, because a lot of the shopping's done in December for Christmas. So it's interesting to see, that we're still going up, still trending up. And I mean, in some cases we see 8%, 5.8%, 2%. That's pretty good with the 6.4% overall for the total revenue. So I really like to see that, and I'm glad that we're still seeing some growth there. But one of the things that they had mentioned was just the impact that you see from just sort of the volume of different packages. So looking at the notes that I had, so dividend payments subject to board approval of about $5.2 billion. That's awesome. Yet finally, UPS is announcing its plans to double the amount of share purchase for 2022, taking the target at $2 billion for the year. You love to see share purchases. And then in terms of volume, and this is from their earnings call, however, we anticipate volume growth rates will be lower than we originally expected. The volume growth rate in the first half of the year is expected to be negative. We expect it to improve in the second half of the year. Pricing is expected to remain firm, and we'll continue to price based on the value we provide to our customers. So I think one of the things with that, and I noted it down here too, was the way that they plan for the year, at least so far, is based on the lower volume. They're going to control everything with their pricing. So they kept harping on it too in their earnings call about how they're pricing based on the services they provide, and they believe that they provide a lot of value. So if that's the case, then customers can continue to prove it, and their big customers have been continuing to prove it, pay it. So it'll be interesting to see going into the second half of this year what that looks like, but they don't seem too worried, at least from the earnings call. Last note, so we don't have any direct insight into consumer behavior. It's more from what we're hearing from our consumers who are telling us that there's been a shift from goods to services. You'll probably experience that if you've gone on vacations. Again, if you look at flights, you look at hotels, they're up huge for the summer. And so we have Visa and UPS both talking about services. So if you're looking at something, maybe check services to see if there's anything that tickles your fancy, but that's going to be UPS. Now, the last thing that I wanted to note was DR Horton. And I wasn't originally going to do this one, but I felt like, homes are getting a little scary. You keep seeing the mortgage rate go up and you wonder what's going to happen to them. But, and actually PensionCraft did a great job on the housing market for 2022. So if you want to go check it out, just go look on his channel. It's pretty recent. But the home building, you can see here on the segments, the home sales was about $7.4 billion. Obviously, if you look at this, home sales for home building, so $7.4 billion, pretty much 7.5. So land and lot sales were about $7 million. And then obviously 4Stars, one of the items that they own, had $421 million. You had financial services, $222 million. You had rental property sales, $222 million. Then you had an elimination in other of land lot, so negative $374 million. Overall, the revenue comes out to about almost pretty much $8 billion for the quarter, which is awesome. I mean, you look at the comparison year over year. I'm not surprised that they have a lot of revenue. I mean, they've been building a ton. It's really not that shocking when you look at it. And you're going to see here in the notes why I think a lot of people have been buying homes. It's obviously just low mortgage rate and all that good stuff. But you can see here the net sales order increased 10% in value. So from $9.7 billion, to $9.7 billion on 224,000 homes sold. They repurchased 3.1 million shares of common stock for $266 million. Now, one of the things that they had noted in this earnings report was net sales orders for the second quarter ended March 31st, 2022, decreased 10%. So the total sales orders, not the price, but just the actual sales orders decreased 10%. That's kind of crazy. Increased 10% in value, obviously, as I just mentioned, and then $8.8 billion in the same quarter of the prior year. The company's cancellation rate for the second quarter of fiscal 2022 was 16% compared to 15% in the prior year quarter. Net sales orders for the first 6 months of fiscal 2022 decreased 3% to 45,862 homes. Now, the company repurchased 3.1 million shares of common stock for $266 million, as I had mentioned. And then totaling, so during the second quarter of fiscal 2022, totaling 5.8 million shares of common stock for $544 million during the 6 months of March 31st, 2022. The company's remaining stock purchase authorization was $2 million, and in April 2022, our board of directors authorized a repurchase of $1 billion for common stock, replacing the prior authorization. The new authorization has no expiration date. So another $1 billion worth of repurchasing. And then obviously they're going to keep the homes that they have and try to sell their new builds. One of the things I saw they did mention was they tried to sell their homes closer to the closing date. So that way buyers can, they're not speculating on what the home will look like. They actually have some sense of what the home actually looks like. But one of the things that I noticed that made me very curious was just the decrease in sales orders. Now, whether or not that's because you're comparing when a lot of homes were bought to this year, it's going to look really weird on the comps just overall through the rest of the year. So I'm curious to see if that number is just, because we had so much demand last year, or because there's actually some fundamental things that are going on in the housing market. So it'll be interesting to see as the mortgage rates, how that affects the sales for a company like this. And it's something that you should definitely pay attention to just overall in the housing market if you're going to get into a company like this or like a REIT or something that focuses on that. So it is something that I wanted to mention. Now, thank you all for joining. This earnings release week has been crazy. Again, I'm going to be looking at Facebook tomorrow and Intel on Friday, whichever day it is. But make sure if you have any other companies you want me to look at, let me know down in the comments below. If I see a lot of companies shocking earnings tomorrow, I'll release another video. If not, I might just touch on Meta overall and just what I thought and what I think is going on, because it's gone down to $178, I think, as of today, and I've just been buying as we keep dipping. So let me know down in the comments below what y'all think. Hope y'all enjoyed the video, and thank y'all for joining me. Have a great day.